Welcome to today's Top Rated Seller webinar. Today's webinar is part of a monthly series of webinars specifically geared to eBay sellers and brought to you at no cost by our wonderful sponsors. Just a little housekeeping to keep you guys in the loop and know what's going on. Yes, the recording is being recorded and we will make it available on our YouTube channel at no cost to everybody. These presentation slides will also be available. If you're having trouble hearing me, we recommend trying to use the call-in number with your phone. We are going to be here for about an hour, so we're ready to go. And next is our wonderful way to stay connected. We definitely want to keep you with us, and there's a new website for you to find us on. We are now located at pagemage.com/top rated seller webinars. Great new website, and we hope you'll sign up for our newsletter there. Another way to stay connected with us is to join our Facebook group. We have a very active and large Facebook group now. Best way to find us there is at facebook.com/groups/TRS webinars. We'll see you there. Now let's talk about more webinars. Starting in 2013, we're going to have lots more educational webinars free to the eBay sellers, and we would love to keep in touch with you about them. And the only way we can do that is to make sure you're signed up for our newsletter. The way to sign up for the newsletter is to go to pagemage.com/top rated seller webinars and sign up. That way we'll stay in touch and keep you notified of all the great new webinars coming for 2013. And all of these webinars come to you free from our sponsors and our connectors. Our connectors are myself, Kat Simpson of That Cat, and Karen Locker of Solutions for Ecommerce.com. Our fantastic sponsors for these great webinars are eBay Radio, helping you achieve and maintain top-rated seller status, and you can get where you've got the grip. Best way to find them now is at ebayradio.com. Our other sponsors are Outright, putting your accounting on autopilot. And Outright is presenting the webinar today, so we're very excited to hear from them. Terapeak, where you make more money on your eBay sales. Remember, Terapeakers make more money. Our other sponsors are PageMage Smart Gallery. PageMage helps you cross-sell your targeted items in eBay, listings, and stamps.com, where you can do your postage from your PC, the very first one. And thank you all for being here. Our great sponsors provide these free webinars, and I won't take any more of their time because we've got a lot to learn today from Laura and Priyanka of Outright. 10 tips for a Blockbuster year-end. How are you doing, ladies?
Great. Excited to be here, and I'm glad that people are here to hear about the year-end. This is quite a big year-end this year because of the fiscal cliff and the stuff happening there. You guys have probably heard a lot in the news, and so we're going to talk a little bit about that as we go through. So we'll go ahead and get started here. Tip number 1, take a photo of your home office. The reason why we talk about this is because one of the most missed deductions by eBay sellers is the home office deduction. The reason why people miss this deduction is because there is a belief that it will cause an audit, and so a lot of people are a little bit scared to take this deduction. But the great news is for any of you who think this is an audit trigger, it's actually not. So in the 1990s, it was a big audit trigger, and then as more and more home offices have come to be, it's become less and less of an audit trigger, and the IRS has actually stated that it's not a trigger. And so you can safely take it if you apply for it, or if it does make sense for you. Now, in order to take a home office deduction, you do need to use your home office exclusively and regularly for business, and that's the official term, exclusively and regularly. So what that means is, let's say you've got your home office and it's in your guest room, and there's a bed in that guest room. That would suggest that you are not solely using that space just for your office, because you're actually using the bed as well. So therefore, that would not be considered to be a home office. And so in order to figure out what this deduction should be for you, what you need to do is figure out what part of your home are you using just for business, and then you actually want to measure out how big that space is. So in the example of the guest room I talked about, the part of the room with the bed is not your home office, but it could be a portion of that room that would be your home office. Once you have those measurements, that's the percentage of your rent and your utilities that you can actually deduct through this deduction. So for example, if my house is 100 square feet and my home office is 10 square feet, then basically 1/10 of 1/10 of my rent and my utilities I could deduct. If you do have a mortgage, please note that there are some weird little things that happen there in changing the cost basis of your house. So if you are trying to deduct a part of your mortgage, you probably want to talk to a tax professional just to make sure that you get that right. But the reason why we want you to take a photo of this home office is, one, you can bring it to your accountant to see if you actually do qualify. Two is if the IRS ever questions this or asks about your home office, if you've got a photo that was taken at the end of the year and within the year that you're deducting it, you can say, hey, this is the proof that this was a home office, and the IRS looks very favorably upon that. So definitely recommend. It takes just a couple seconds to do, so I would highly recommend doing this one.
Laura, we have a question from the audience which fits right in right now. If you don't have a mortgage, is it still worth it?
You probably have rent, and so it would definitely be worth it.
I'm thinking this person if they live in a paid-off home.
Oh, okay, yeah. Then, it may not be as worth it. You might just want to charge yourself utilities. You can actually charge your business a portion of the utilities. So rather than actually taking the deduction, it would basically be an expense, like the utilities that you had that were helping that office. For example, electricity, stuff like that. And that might be a better way to go. But if you have rent, for sure, it's definitely a good one to take.
Okay, thanks.
So moving to tip number 2, taking note of inventory and donating. So this is one that confuses a number of eBay sellers, is how do you account for inventory? For those of you who have been tracking your inventory throughout the year, you don't need to worry about this as much. But if you haven't been tracking your inventory, you do need to, at the end of the year, take note of how much inventory you have left, because you are not allowed to expense your inventory unless you've actually sold that inventory. So this would be anything that you're putting up on eBay to sell that's considered to be inventory. And so that's what you need to count, basically, at the end of the year. So right around December 31st, you should take a note of it, walk around your house and see what you've got, and do that. And then while you're at it, if there's anything that you're looking at now and you go, that's probably not going to sell, it might be obsolete, this is sort of out of style, it's a great time to go ahead and donate that stuff. One, because you can take the charitable deduction for that. You can actually write that off of your taxes. But also because with the fiscal cliff looming, nobody knows whether or not charitable deductions will change in 2013. And so if you are at all planning to do donations, it's wise to do them this month so that you can get into tax year 2012. So that's pretty important, given that there's some uncertainty there. And at the same time, you're doing good, right? If you're donating stuff, it's always it's good. Tip number 3, spend more. So there are really 2 parts to spending more. The reason why we suggest spending more is if there are any expenses that you were planning for January, if you move them into December, you can actually deduct them from your taxes this year if you're doing cash basis accounting, which probably most of you are. The one exception would be if you think that the fiscal cliff is going to significantly raise your taxes next year, then you might actually want to do the opposite and move expenses out into January so that you can reduce next year's taxes. But given that we're not really sure what's going to happen with that, and it's a little bit uncertain, and there'll probably be some sort of deal made between the parties, it probably is still wise to try to spend more now in order to get the lower taxes this year, because it's going to be a full year before you have to pay your next set of taxes. So why wait? And of course, I'm not advocating spending more than you normally would spend for your business. I'm not saying, hey, get more expenses. It's just expenses that you already were planning to incur. Go ahead and spend it early. And then another factor here, which probably only affects a small portion of you, but is worth mentioning, is there's a special law called Section 179. And that applies to anyone who is buying large amounts of equipment. So if anyone is manufacturing the stuff that they're doing on eBay, or for some reason buying a lot of cars and trucks for their business, stuff like that, in most years, you're only allowed to depreciate $25,000 of those expenses each year. But special for 2012, you can expense, I think it's 139,000 or something like that. So it's a lot more. So it's definitely very advantageous to people who are buying equipment that you should be buying that equipment in December, not in January. And Kat, are there any questions at this point?
I think we do have a couple questions about deductions and donations. Karen, did you have those?
Yeah, there was a question. It was more a statement that somebody wrote. If you take something out of inventory, even if you donate it, you have to pay use tax on that. So
yeah, if you're a reseller and you didn't pay tax on it originally.
Okay, so if you bought it and didn't pay tax on it originally because you were buying it for inventory and you take it out of inventory to use, then you'd have to pay use tax. Is that a correct statement?
Yeah,
Okay.
if you're in a state that has sales tax.
Okay. Yeah, here we go to the sales tax thing again.
So it gets a little complex now.
I had a question too about your tip on donations, and I know that this has been discussed on many different Facebook groups because when you say donation, people typically think about taking a donation on their personal taxes. But since this is inventory, it's not quite that easy. Can you explain a little bit about how a business would take a charity donation?
Yeah. So if you're a Schedule C business, which means that you're like an LLC or you're just a sole proprietor, basically you're filling out the same 1040 that the individual is doing, except you have a Schedule C. So the rules for donations are the same for that type of business versus an individual. And so that's why you can donate. I mean, if you donate over $500, then you do have to document that. So you have to have take a photo of it before you donate it, that sort of thing.
Awesome.
But it's not, you can get around it.
And that was all we have for now.
Okay.
The spend more, I did want to say that's my favorite tip so far, Laura. Thank you. Spend more. And I was thinking about, you talked about equipment, but I was thinking if you've got a printer that you know is going out and you're going to have to replace it pretty soon, or my computer is dying, and so I made the choice to go ahead and buy the new computer this month in December versus next month in January. Is that the kind of thing you're talking about?
That's exactly right. And that's the sort of stuff you should do. And if you're, like I said, if you're doing equipment over $25,000, absolutely this is the year to do it as well. So both smaller purchases as well, if you're going over 25,000, definitely.
Awesome.
So number 4, prepare your books for year end. And so for this, it's really about making sure that everything's in line, that you've closed out your books on December 31st, because most of you have a calendar year that's your fiscal year. So you want to make sure that you've got all your records in order, because it's a lot harder to deal with it next year if you didn't do this. When you get to April, if you suddenly realize that you don't have all of your books together, that can be a problem. And so you want to make sure you're doing it by the end of this year. For example, with Outright, we pull in people's PayPal and eBay feeds and put everything into a tax category automatically. And so for people who are using Outright, you can literally just add those two accounts. It's through a read-only connection. You add PayPal, you add eBay, and then that'll give you your entire picture for the year of what you've spent. By doing that before the end of the year, you can also see what your taxes are looking like. Do you need to spend more? Do you need to donate to charity to get your taxes a little bit lower? And it's really just a good practice to make sure that you close out those books. And then that way, January 1st, you're ready to go with a new year. And if you've got a system in place for the new year, that's even better, because then you're ready to go. Tip number 5, get a tax ID. So this one isn't necessarily related to it being the end of the year, but it's just a good time to do this. There are these new rules and regulations that started last year that require PayPal to send out 1099-K forms to anyone who has more than $20,000 in sales and more than 200 transactions. So for a lot of you who are getting these forms, if you think about that, PayPal has to print the forms, then they're being mailed all over the place. They're being mailed to you, they're being mailed to the IRS. And so if you're using your social security number for your business, that number, you're sort of putting yourself at risk a little bit. I mean, it doesn't happen too often, but if somebody were to get that piece of mail, they would have your social security number, and that's not good. And so you definitely want to go online, and you can just type in Google, get a tax ID, and it doesn't take that long. It's real quick to do. You don't have to register as a business or anything like that. You can just get the tax ID, and then that's the number that PayPal will use to send your forms to you. So just, again, good practice, not necessarily for saving money, but for protecting yourself against fraud.
Also adds legitimacy to the business oftentimes, because getting a tax ID shows that you're clearly engaging in this as a serious business and are going to be in it for the long haul. So it's good for your reputation as well.
Great. So tip number 6, start tracking your mileage. And I say that sort of quite loudly because I want to make sure people are aware that if you start tracking your mileage, it's a huge deduction. I mean, if you think about it, you're going to the store to buy stuff that you're using to sell on eBay. You're going to the post office to drop off packages. All of that is mileage that you can be deducting, and it's at a rate of 55.5 cents per mile, and that can really add up. And so people can save. I've seen people save $1,000, $2,000, $3,000 on their taxes just by tracking their mileage.
It's also really helpful to track your mileage just from the perspective of making sure what your expenses are. We at Outright actually had a customer tell us about how she would go very far to a store to get inventory because it was much cheaper there, and she wasn't quite sure why her business wasn't doing so well. But once she started tracking her mileage, she realized that she was actually spending so much money on gas going to that cheap store that it was negating the benefit of it being a cheaper place to buy inventory. So she ended up changing her practice and going to a more expensive closer store and ended up making more profits. And this only happened because she started tracking her mileage.
And so there are different ways that you can track your mileage that will work. I've seen some people will actually take when they start a business trip, they're going to the post office, they'll take a photo of their odometer, and then they'll take it again when they get to the post office, and then that's what they'll write as their mileage. I've also seen people use they've just used a notebook, and every time they go to the post office, they'll write post office and the date, and then all they need to do is check once what that mileage is to the post office, and then they just multiply it. You had 10 trips in January, and it was 10 miles, then you've got 100 miles that you can deduct. Other options, there's an iPhone app called MileBug that I've heard works pretty well, and then the Outright app, the Outright iPhone app, for those of you who are Outright users, you can actually track your mileage in there. So I think a lot of people don't know that, but you can go in and you can actually track your mileage. And I know that the team is working on some additional features to make it even easier for you to track your mileage using that app. So that can be a great way as well. And that is free in the iStore.
That's great. Does the Outright app use the GPS, or do you have to enter the mileage on the app itself?
So right now you have to add the mileage, but the thing I was alluding to was that using the GPS to do it, and that is something they are actively working on.
Fantastic, because I know this is so important to track your mileage, but all my years in business, Laura, I just never made myself do it until I found MileBug. And MileBug you just push the start button and the stop button, it'll use your GPS, and that makes it easy enough for folks to do. However, I just switched from iPhone to Droid and found out that the MileBug on the Droid does not do that. So if you're not an iPhone user, you'll have to look for a different app.
And while we're talking, lots of people are asking right now if Outright has an Android app. I ran that all together.
Yeah. We do not, but I know that it's being worked on. So again, I'm not allowed to give dates, but I can tell you it is being worked on. So right now, iPhone is the main one that we've got, and then in the future we will have an Android. Were there any other questions on this point?
Oh, yeah. Not necessarily with the mileage, but here's one specific for mileage. Mileage can be used along with car expenses such as gas repair. Is it an either, both, or an or? Meaning you can only use one or the other.
Good point. You can only use one or the other. That is correct. Usually, though, like 99% of the time, taking the mileage is a better deal for you because it is 55.5 cents per mile. So that ends up working out, just if you do the math versus how much gas costs for a mile, it ends up being better to take the mileage. But that, of course, assumes that you're tracking it, and so you do need to be actively tracking it. And if you can't get the discipline to do that, then definitely take the gas, because it's better than taking nothing, right?
It is. The other question is for mileage, it's to the post office and back to your home, or is it just one way?
It would be both ways. If assuming that that trip was for business, it would be both ways.
Okay. And somebody else wants to know where in the Outright app can they do their mileage?
When you go to add an expense, there's like on the expense tab, you go add a transaction is the actual button, and then it will ask you, do you want? There's a setting you can click mileage, and then you can type in the amount of mileage that you've had.
Okay.
And that would apply to the iPhone app as well as to the actual app on the web.
Oh, here's another one. What about a lease vehicle used part-time for business?
Again, that would be the same thing as what I said before, which is you would still have the choice between if you're leasing it just for business, then you could deduct the lease, but then you couldn't do the mileage. So it really would depend on how much you're paying on your lease to decide whether or not which one you want to do. But again, usually the mileage ends up working out to be the better deal.
Okay. Thank you. If you want to move on to the next topic, I'm going to save some of these other ones for later.
Great. And I will turn it over to Priyanka for number 7.
So tip number 7 is send out your packages early. So as some of you might have heard, UPS, USPS, and FedEx are all increasing their rates for shipping costs. And FedEx and UPS are actually doing that by 4%. So it's good to send out your packages if you have some ready to lined up to go sooner rather than later. An important point to note is that all 3 of these have different dates when the new rates will go into effect. So the soonest one coming up is UPS, which starts 31st December this year. So if you are using UPS and plan on shipping something out, do it now. Don't wait till the end of the year. And then next comes FedEx on the 7th of January. Their new changes take effect. And finally, USPS on the 22nd of January. So it's important to make sure that your packages are going out before these dates, depending on which shipping company you're using. One interesting fact to note is that up to May, through PayPal, you could use UPS, but after that, they're going separate ways. So this is something to note just for your workflow purposes. UPS and PayPal will not be as closely linked in the future, May onwards. So it's important to send out your packages early, get your shipping done, pay less on that. And this is a side note which might apply to some of you. Some of you might be selling on many platforms, and one of those is Amazon. So it's always good to consider the FBA option, which is fulfillment by Amazon, when you're selling through them, because then you don't have to deal with shipping as much. Always a good thing to think about, and many people have found it really helpful. So now we'll move on to the next tip. Tip number 8, hire your kids and spouse. Now this might sound strange, but it makes sense when you think about it. So often, if you have kids in the house, teenagers, they probably help you with your business, and anyway, it's good for them because they're learning. Some of the tax regulations are such that if you have a profit that you make on your business, you would be taxed on it, as you know, and you would end up paying employment tax, self-employment tax, etc., etc. And if you're at the $6,000, you'd probably pay 15%. And then there's also the income tax on the profit itself. However, if you hire your teenager in the house for the help they're already giving you and pay them up to $6,000, that money is not taxed anymore because you're paying somebody for it. So it's a good saving, and in some cases it can go as high as $2,000 saved. So it's definitely worth looking at. And it kills 2 birds with one stone. It helps you with your taxes, and it helps your kids learn and get started early. Another thing, similar along the same lines, is hiring your spouse. If you have no other employees and you hire your spouse, then you can cover your spouse's family, which is yours, and their medical expenses as an employer through an HRA. This gets slightly technical, so what I would encourage all of you to do if you're interested is to go online and read up. There's a lot of resources that explain exactly how to proceed with both hiring your children for part-time up to $6,000 and hiring your spouse primarily for medical care benefits. So I highly encourage all of you to look into that. As sole proprietors, medical costs are often pretty heavy, and it's better to take all the advantages you can get.
Great, thank you, Priyanka. So we'll go on to tip number 9. Learn from 2012 to ACE 2013. And so there's some specific things you can do. One is look at your profit and loss statement and see, over the year, how have your expenses and how have your revenues gone up or down. Is there a specific time of year when you're doing really well that is sort of unexpected? Like, for example, maybe in February, your items are doing really well, and then you realize, oh, it's because of Valentine's Day. My items are working really well for Valentine's Day. Then you might want to list more in February than you normally would or would have last year. Additionally, you can look like in Outright, if you look at your spending chart and also your vendor chart, and see for the year, what were you spending your money on and who were you spending it with. And the reason for this is with your spending chart, you can actually see, is there any expenses that you had that were higher than you thought they were or higher than you thought they should be. Then you can make those changes for 2013 to get better. For the vendor report, when you look at that, if there's anyone that you're spending a lot of money with that you know personally, you can always consider going and negotiating a better rate. So if you have the exact amount that you spent with them for the year of 2012, you can negotiate with them and say, hey, this is how much I spent with you. This is probably a good portion of your business, or it's important. I'm an important client to you. Can you give me a discount for 2013? And that can really save you some money quite quickly. And it's not that hard to do. People are a little scared sometimes to do negotiating, but it's really easy if you actually have the number in front of you to just sort of ask. And if they say no, they say no. But if they say yes, you've saved yourself some money, which is great. Okay, tip number 10. This is the big one, the fiscal cliff. So I'm going to talk a little bit about the fiscal cliff. First, I want to go ahead and do a poll, though, just to see how concerned are you about the fiscal cliff. So go ahead and take the poll. Should be up on your screens now. The votes are coming in fast and furious. I'll give you a few more seconds to vote. Okay, and here I'll share the results. And so now you should be able to see that pretty much it's across the board. There are some of you that are quite concerned, but a good portion that are right in between, a little bit and an average amount. And only 22% of you are not at all concerned. And Karen says she's very concerned, as is Kat. Great.
So are we.
So the fiscal cliff, as you guys have probably all heard in the news, is coming up. December 31st is sort of the deadline. On January 1st, all of the taxes will be going up if the government doesn't do something. In addition to that, also what will happen is the spending of the government will go down as well. There's some mandated cuts. There's another factor that a lot of people aren't talking about, but that is important to note, is also that the debt ceiling is going to be reaching its limit sometime at the beginning of the year. So that's actually a separate thing from the fiscal cliff, but if that hits, government spending will go down even more. The nice thing for you as eBay sellers is that the first tax raising that'll happen will actually be the payroll tax, and that'll take effect for people who are receiving a paycheck right at the beginning of the year. For you guys that aren't receiving a paycheck, a lot of the effects of the fiscal cliff won't happen until basically a year out, because you've got to wait until next year, 2013 taxes, when you'll see that increase. The government is expected to come to an agreement. I think most people think they will. It's a little bit unclear as to whether they'll come by the end of the year or not. The good news is that or I shouldn't say good news, but something to note is that the government does actually go on leave starting January 19th. So what that means is that if by January 18th we don't have a deal in place, you can be pretty sure that a deal will not happen until next year. So it's important to note that within a week we will know, are they going to fix this or are they not by the end of the year. If they don't fix it, they could end up fixing it in January, but we won't know that and we can't make a decision based on that. And so assuming that they don't come to a deal by December 18th, something you will want to consider is, can you get paid before December 31st? So can you move income into December? And this will obviously raise your taxes for tax year 2012. So you don't want to do this if money is really tight, because then you will have a higher tax bill. But if you've got a little bit of money on cash on hand and can pay the taxes, if you get paid before December 31st, then your taxes will be higher, but it means that when you're in a lower tax bracket, that's when you'll be paying taxes. So that next year, when your taxes go up, potentially go up, you'll be able to you'll be paying less next year. And so this is assuming, of course, that you are a cash-based accounting, which most of you are. And cash-based just means that you recognize the revenue when you get the money. So hopefully that makes sense. It's a little bit complex because it's so up in the air and people really don't know what's going to happen. I think the most likely scenario from what I've been reading is that there will be a tax increase for couples making over $250,000 a year and individuals making over $200,000 a year. So if you are in that group, definitely getting paid before December 31st will be advantageous for you. If you're under there, that's when you kind of want to wait and see what happens December 18th and see if there's a deal or not. So Kat, any questions have come in?
Oh, we have questions.
And comments.
Yeah, but a lot of them aren't so much about the financial cliff, more about other things you were saying. One of the questions though Cherie had is about when you do your taxes, if you pay them quarterly, are you going to see the effects of going over the cliff sooner or later?
Yeah, you would see them a little bit sooner because you'd start paying those quarterly taxes. So January 15th, you would be paying Q4, so that wouldn't be an impact. But then the next date would be April 15th would be the next quarterly tax payment, and that would be higher if taxes are higher. So yes, it would be April that you'd start seeing that if you are paying quarterly estimated taxes.
Okay. Some of the other questions that came in these groups of tips is, if we're hiring our kids or our spouse, won't we have to deal with workers' comp insurance and all of that stuff, like if we hire an employee?
I think since if you would only have, the only employee you would have would be your spouse or kids, that would not be the case. For kids, you're always hiring them part-time, so all those things don't apply. And in case of your spouse, since he's the only employee, it shouldn't, but I would double check this one with some research.
Okay. And then the next question is, what is the easiest way to track that payroll then for the spouse and kids?
I think since the spouse would be the only employee, again, this would be a special case. There are softwares out there that can help you do that, and there are a bunch of varieties which you can choose from. At the same time, since it's just one person to be hired, it should be fairly simple, and it's recommended because of its ease. And the caveat always is that your spouse is your only employee, and that's when these are benefits to you.
Yeah. And the one I would mention, if you are interested in like a payroll service, which is one way to go, Intuit Online Payroll. I've heard really good things about that. The caveat I would give you is that I used to work there. It's been a few years, but just so people know that I am recommending it. But I did used to work there, so.
At the same time, it would be good to do more research on this, because the best of my understanding is that all the overhead that comes with employing people does not happen when it's just one spouse you hire or a kid you hire part-time. So please do check on this before purchasing a payroll service.
Okay. And then another question, especially here on the Northeast where we just went through Sandy, what about natural disasters? This person had to shut down for 2 weeks as they had no power or internet. Would this be a loss that they could report?
So I'm not 100% sure on this one, but I do believe so. That any sort of expenses you have for your business, which would include natural disaster loss, would definitely count. And I'm pretty sure, and I don't know 100% for sure, but I'm pretty sure that the government has or is going to pass some additional laws about that. That maybe you can get a tax credit even or something like that. That's usually what they did, and it's what they did for Katrina. So if they haven't done it yet, I'm sure they will. Yep. And we just Googled it, and we did find there is a tax relief for Sandy victims bill that's in Congress right now. And so that I would suspect that the government will pass that because
it'll get passed at some point with this. Yeah.
Exactly. Who knows when, but
exactly.
And IRS on their website are stating that they are providing tax relief to victims of Hurricane Sandy. And they have extended the deadline, so that's definitely something they've already done.
Cool, thank you. All right, here's a good one. If buying an item and writing my own receipt, what is required on that receipt for deduction purposes?
So this is like at a garage sale?
It could be a garage, or any of those garage sale, yard sale type of thing.
So I believe usually, what I would probably do is have the person who is selling you the item sign it, and that would probably be the most robust way, so that so even though you're writing out your own receipt, they're signing and verifying, because the issue there is that if the government doesn't believe it, generally I would say the IRS tends to be a little bit lenient on this sort of stuff if you're actually trying to do it right. I think if you guys know Cliff Einrico, he always makes the comment that even a dog knows the difference between being kicked and being tripped over. And it's the same with the IRS. They know if you're really trying to defraud them versus if you're trying to do the right thing. And so that's why if you would get that person to sign your receipt, it sort of shows that you're taking the effort to show that you did have this receipt.
Okay. Here's another question for you. Do you have to claim all your inventory that you have left at the end of the year?
So I wouldn't say you have to claim it. It's more that you cannot deduct it. So that's the difference, right? Like, if you have all these expenses and you're tracking that, right? Because you want to eventually deduct it once you sell. Let's say I've got a figurine that I'm selling. At the point in which I sell that figurine, I want to deduct the cost that figurine had for me. Like say the $10 that I spent on it, I want to deduct that. And so I do need to track that to make sure that when I sell it, I can deduct it.
Because your inventory is an asset, isn't it? Until it actually sells?
Yep, exactly.
Because I know on my Schedule C I have to write down how much inventory I had on hand at the end of the year, and it has to match the beginning of the next year.
Exactly. And the reason for that is because of those deductions and being able to show that, hey, yes, I did spend money on this inventory, but I can't deduct that yet until the item sells. And so that is important. And again, you only have to do it at the end of the year. If you're not doing it throughout the year, you can do it at the end of the year. If you're a smaller business and you're able to go sort of through your garage and see all the stuff you've got, you can do it that way.
Okay. Now here's another question. If you have stale items in the Amazon FBA warehouse and you have them destroyed, do you include it? How do you deal with that?
Oh, that's a good question. Yeah. So any inventory that you're destroying is considered lost inventory. I mean, it's considered to be, that would be a deduction because you've gotten rid of the inventory, right, for whatever reason. And so therefore the expense you had for that inventory is a business loss. So that actually is deductible.
Okay.
It's similar to basically donating to charity, getting rid of it. If you're never going to sell it again and it's gone, then that's no longer in your inventory.
Now we have a whole bunch of inventory questions. I think we've opened a question area.
On inventory.
Okay, so that one's that one. Where can I learn how to enter my cost of goods in Outright? That was.
So Outright doesn't really do a great job of this one, I would say. So that one's a little tough. What most people do is at the end of the year, they'll go ahead and put in a transaction that specifically says the COGS, and they'll put the amount that's left, and then they'll reverse that transaction out on January 1st. And that way they've got it tracked, and it actually shows up in all of their reporting.
Okay. Here's one. I buy many things at auction in lots. How do I figure the value of one of those many items in the lot?
So that one, it depends. I hate to say it depends, but it does. Um, you can either apply a flat cost if the items are similar, right? So let's say you had 10 items and they're in this lot, you paid $10 for it, then you could apply $1 per item if they're similar. If they're not, then it gets a lot more complex, and that's when you have to try to figure out what's the fair market value of stuff, and that can get complex. so, so it's up to you, and I would sort of say I kind of have to punt on that one because it really depends on the circumstance, but some things to consider, definitely.
Okay. If I don't have a business license currently, will that affect my deductions if I have kept track of those despite not having the license?
Yeah. No, the Schedule C form is for anyone, so it doesn't matter if you have a license or not. As you know, tip number 5 was to get a tax ID, which is a little bit different of a thing. So I would suggest, even if you don't have a specific license, if you do have a tax ID, that's a good thing to have because of the reasons we talked about preventing fraud.
Yeah, I need to get one of those at some point. Somebody else is saying that they read somewhere that unless you have over $1 million in inventory, that you don't have to claim the beginning and ending inventory.
So we can go check that, but I think you still do. Or again, you cannot deduct inventory that hasn't sold yet.
Okay. If I purchase a large amount of inventory in a product and the value of that product has dropped considerably, is there a way to reflect that on my taxes?
Yeah, so that would be considered, it's sort of similar to the losses, right? You could say that that the value has gone down, therefore it's a loss.
Okay.
So you're getting into some sort of that's probably one I talked to an accountant about, just to make sure you do it right. But yeah, if the value of the inventory does go down, it's basically the inventory is going obsolete, and therefore you could take a deduction for that. It's similar to you hear about businesses doing this all the time, like really big businesses doing this, where they'll take was it Microsoft that bought a big company for 1.2 billion and then realized that it wasn't worth 1.2, and so they took a deduction for that, and they basically said we're going to write this off. Is what it's called.
Okay. Do you want to you want to finish up the questions, or do you want to do your summary and then we'll finish the questions at the end?
Sure. So go ahead and do the summary real quick, and then we can finish up with more questions. So really, the summary is just making sure that you guys can see all of this in one place, and really some of the really ones to make careful note of are the taking note of your inventory, getting your books prepared, and making sure that you've got all that ready. Tracking your mileage, just because it's such a big deduction that people miss, particularly when you're an online seller. There's so much mileage that you have going to and from the post office or to different stores. And you hear of people that go 100 miles to go to an estate sale, for example. That's a great mileage to deduct there. And then finally, just watching that fiscal cliff and making sure that between now and December 18th, that you're keeping an eye on what's happening there, so that you can see how that's going to affect you, and if there's anything you need to do before the end of the year to make up for that.
Okay. Let's see. We'll go back to questions. Here's one that was in the very beginning. Why is it better to use a tax ID than use Social Security number in the Schedule C?
Yeah, and that one is just because it's an issue of, do you want that Social Security number being out there? Because there's a lot of tax forms now that eBay sellers get, like the 1099K in specific, that will have your either Social Security number or your tax ID number. And if it's your Social Security number, it just means that that number is out there. PayPal will have it. PayPal is sending it through the mail to the IRS and to you, and it just it's a little bit risky. Of course, it's it's a small number of people that get affected, but identity theft is not fun. So everyone I've talked to that's had an issue with identity theft, it can take a long time to resolve. So it's better just to have a tax ID so you don't have to worry about that.
And speaking of the wonderful 1099Ks, is it 20,000 or is it 20,000 versus 200 transactions? And I know this question comes up.
It is an and, so you have to take both. If you sold an item for $20,000 and only had one transaction for the whole year, you would not receive a 1099K. So you do have to hit both of those. And one thing to note is that the IRS has publicly stated that they will be doing audits based off of that 1099K this year. It's going to be a small number to start, but they're going to start in the spring with those audits. So So you want to make sure that if you do get one of those forms, that you are reporting that on your tax return and then taking all the deductions and all the expenses that you owe, that you deserve, in order to get those taxes lowered. So it would be, what I'm saying is it would be a bad idea to not report that revenue that that comes on that 1099-K. If you didn't report that on your tax return, basically the IRS has said they will be likely to audit you.
Okay. Now here's another one. If I got a 1099-K for 2011, but I will not meet the criteria for 2012, will I still get a 1099-K for 2012?
Nope, you will not. So, yeah. So
And then,
that's good news, I suppose.
and then the second part of that was, will the IRS expect me to claim the smaller sales that they had? If I used one last year, will they be expecting me to claim some sales money?
Yes, they will. I would say because they've seen what your past history has been, and so they know that you've been making money. So yes, it would be wise. I mean, it's always wise to report your sales. So even if you don't get the 1099-K, it would be wise to report it. Different people do different things. I don't want to advocate not paying your taxes, but I definitely know people choose to do different things, and that's really up to you.
Okay. Now, let's see. I have to scroll through the other questions because there's lots of them. So, can one of the questions, this is an Outright question, can Outright keep track of Amazon sales just like eBay sales?
Yes. You would just add your Amazon account in the same way that you add your eBay and your PayPal account, and then it'll pull in the information.
And I can attest that it works very nice.
Oh, thank you.
You're welcome.
And one thing I would add about that is if people are just getting started now, for PayPal, we can actually get all of your data back to the beginning of the year.
Oh, cool, because it used to be they could only pull, no, it's eBay you can only pull 3 months, right?
Yeah, eBay we can only pull 3 months, but actually everything that goes through eBay also goes through PayPal, and so you can actually get everything from eBay and PayPal back to the beginning of the year. It's just that the first few months of the year won't have as much detail, but it's enough to get your taxes together if that's what you're looking to do.
Okay. And then another question is, do you have a recommendation for an inventory management program?
Oh, that's a good question. It depends on what you're selling. So Stitch Labs would be one. They're sort of geared towards people who are selling like clothing and people that have a lot of different types of items. They don't integrate with eBay yet, but they do integrate with Etsy and with Amazon. So that would be an option. When I was working at QuickBooks, a lot of people used Fishbowl, and that seemed to work well for people who are with QuickBooks. You can actually use Fishbowl.
Okay.
Those are the two I would mention.
All right. Back to the $1 million in inventory. The person said that they read it in TurboTax last year. It was in the help section.
Oh, okay.
No. I think I'm remembering something now. I use TurboTax myself, and it seems to me that 1 million in inventory, Laura, was in reference to what kind of accounting? Cost versus accrual, or what is it?
Yeah, cost basis. Yeah.
Thank you. I think it was cash versus accrual, and I think that was where the $1 million in inventory came in. If you have this, you have to use this type of accounting. Otherwise, you can choose between cash and accrual.
Got it. That makes sense.
I don't think it had anything to do with whether or not you reported inventory, because I've always reported inventory, even when I had $30 in inventory.
So if you're above $1 million, I think you do have to go to accrual accounting.
Right, accrual accounting versus cash,
and that's
under,
yeah. If you're under, you do cash basis, and it's a lot easier to manage a cash basis business.
Absolutely.
All right, back to the inventory questions. We asked about auctions and box lots. Now here's another one. They buy storage auctions, and they haven't kept inventory all year. So what should they do?
That's a good question. So hopefully they've got some sort of records of how much they've spent, in which case then they can try to do their best to apply, I spent this much at this auction, and so it appears that I have this much in expenses. You can try to figure out how much you spent. If you don't have any receipts, like I've heard people that, they basically, they had items that maybe they bought 20 years ago that now suddenly they're going to sell. Unfortunately, if you don't have the receipt or don't have a way to show that you actually spent that, if you get audited, the IRS will say, hey, this doesn't count. You can't take this as inventory and then expense it.
Okay. Is it better to pay quarterly taxes or yearly for a small eBay business?
So that's a big, it depends. So, and it's not, I shouldn't say is it better, it's more, do you have to, would be more the question. So if you are going to owe more than $1,000 in taxes by the end of the year, then the IRS says you do have to pay quarterly, otherwise you will have a fine. Now, the nice thing is that the way you calculate that, there's some different ways to calculate how much you should be paying quarterly. And so they do say, I believe it's if you pay 100% of last year's taxes over the year, then you're okay. And I think if you have like a refund 1 year, you're okay. You definitely want to look up I'm blanking on some of the specifics, but there's definitely a pretty easy set of rules that you can look at to decide if you have to pay quarterly. And again, you only need to worry about that if you're going to owe over $1,000 at the end of the year.
Okay. Yeah, I know I generally just do yearly because I get a refund and then they take what I owe them for my self-employment right out of the refund.
Yeah, and particularly anyone who has, like, if you have a spouse that's like has a full-time job or something like that, then that person, then your spouse is actually getting withholding taxes throughout the year, and a lot of times that will cover it, from what I've seen. And I don't want to say that as a global statement because it depends. It really depends on your situation, but you may be covered if you have a spouse that's working full-time.
Yeah. Or if you have young children and get earned income tax credits because you don't make that much on eBay, that's what saves me every year. Because I earn money, so they give me a refund.
Yeah. And if you do, the good news right now is even if you owe the quarterly estimated and you don't pay it, the government will send you a letter saying, hey, there's a fine because you didn't pay it. But because interest rates are so low right now, the fine isn't that large. So when the interest rates go up, you really want to pay attention to the quarterly estimated. But right now, the fine you're going to get is not that big.
Okay. Let's see. Here's another question. Do you recommend having a business phone and a personal phone with separate bills for that deductible?
Yeah. It's probably a good idea, just to be, to completely, because otherwise then you'll have to deal with, well, how much did I spend on my personal phone versus my business phone? And that can get really annoying really quickly. And so if you are making a lot of business calls, you may want to consider that for sure.
Okay. Let's see. We're back on the 1099K. If I do not do $20,000 and sell $200 and sell 200 items in 2012, will I be flagged for an audit? I'm thinking this is the person that last year, or it would be also fit for the person who last year did make it and got it and didn't this year.
Yeah, that's a tough one. I mean, according to the specific things the government has said they're looking for on audits, the answer would be no. But again, I don't want to give a categorical no because the IRS can audit whoever they want to audit. So if they think that something looks funny in your tax return, then they probably will audit you.
And do remember that they added 20,000 employees this year.
Yeah.
And on that cheery note.
Yeah. And okay, here's a good one. If I sell on consignment to people and pay them only when the item sells, still have some of the inventory, how does that work with the inventory questions we've been having?
Yeah, like what do you do? How do you account for that inventory?
Exactly.
Yeah. So usually with consignment, what you're doing is you're considered to sort of be buying the item from the person, and so therefore you would take that as inventory, right?
Okay.
So, and that confuses people because they say, well, I didn't get the revenues, right? Like, let's say that I'm supposed to pay half to Priyanka because she's the one who gave me the item that I sold. People say, oh, then my revenue is only half because half was Priyanka's revenue, but the IRS doesn't see that way. They'll see it as 100% of the revenue went to me, Laura, and then I paid Priyanka 50% of it, and that's how they look at it. And the reason that's important to mention is because if you are getting a 1099K, that full amount that you sold that item on eBay for will be on that 1099K.
Okay.
So
would what you paid the consignor Would that be considered the cost of goods then for that item because that's what you're
Exactly.
paying out? Okay.
Yeah.
That's
That's
good
not how a lot of eBay sellers have done their accounting in the past, but it's important to do that because of these 1099Ks.
Yeah, that's good. This is a good question because I'm working with putting people's inventory into spreadsheets, and that's one of the things I've been saying is when you sell it, let me know so I can put it in as your cost of goods.
Yeah.
Make sure I had that right.
There were so many upset people last year when the 1099Ks came out, and people who were doing consignment sales, in particular trading assistants, were really upset when they saw those numbers because they said it's so high. This isn't, I've been tracking my revenue, I've been doing it the right way, but they were considering that the revenue that went to the consignee person didn't count as revenue to them, but it does.
Yep.
And then obviously you deduct it, but so the taxes end up being the same, but the accounting is just different.
Okay. Let's see. Here's a question. If I don't get a 1099 or qualify for one, should I request one from PayPal for taxes?
No, I would say absolutely not. So
they can have mine, Laura, if they really want one.
Yeah, there you go. Yeah. PayPal wouldn't know how to handle that because they basically have a system that says, the IRS requires you to have this 1099 above a certain amount. If you're not required to have one, then they're not going to send you one. So even if you were to request one, they wouldn't be able to do it for you.
Okay.
And you don't need one. I mean, if you're under that amount, you can just you can look at your PayPal reports or look at your outright account to get your revenues, and that's what you're going to put on your tax return.
Okay. And we have one person who's had a problem with their Amazon account, adding it to outright that it never synced completely. Who would they email, Laura?
You want to send an email to me or Priyanka, either one of us. Here are our email addresses, laura.m@outright.com and priyanka@outright.com.
Okay, thanks. All right, what about handmade items and keeping track of, this is a person who makes things out of fabric, as far as inventory and as far as costs and expenses?
Yeah, so the inventory is considered to be anything that you put into the item. So for example, if I'm making a pillow and I've got, maybe some fabric, cotton, and I've got thread, all of those are considered to be a part of your inventory because that's what's being used to make the item. But the scissors that I use to cut the fabric is not a part of inventory because that's not in the item. And so that's actually an expense. And so that's the way to think of it. It's just anything that goes into that item that's going to be sold, that counts.
Okay. So, and to account for cost of goods sold for stuff, cost of goods sold if you're selling stuff that you already own. If you have the receipt, you can just count that, right?
Yep, if you have the receipt, great. That's what you put on your taxes. If you don't have the receipt, you could, the IRS would say then you cannot.
Do the initials SOL mean anything to you?
Yeah, exactly. Unfortunately, I know some people do it anyways and hope, sort of hope and pray they don't get audited.
Right.
But again, I can't advocate for that.
The point is that Laura is so eloquently skating around. You can claim anything you want on the taxes. It's whether you can prove it is where it comes down to.
And whether the IRS is going to come knocking on your door for that proof is the next question.
Exactly.
Okay.
Yeah, the IRS will be a lot more aggressive on you if you're completely hiding your income or something like that. If you get a few things wrong, it's a lot different of a situation, and the IRS will treat you very differently depending on which one it is.
And the states can be entirely different too. I know the state of Massachusetts, for my $500 refund, has given me a desk audit the last 2 years. So even if it's not messing you up in the federal IRS, you've still got your states to worry about too if you pay personal income tax there.
That's true, and some are more aggressive than others. California is pretty aggressive.
Massachusetts is not being very nice to me.
Yeah, Pennsylvania, Connecticut, and Illinois are the ones that I've heard from sellers saying that they're somewhat aggressive.
Okay.
That's just quantitative.
Yeah. Well, and of course, Massachusetts today just signed an agreement with Amazon to collect sales tax, so it's like, oh, good. But we don't want to go into sales tax. That's another whole mess. Okay, in my Outright app in eBay, it shows that sales tax, quarterly tax, year tax. Then it shows a tab for a record of payment. How and where do I pay these taxes, and how do I record them later in Outright?
So the taxes actually go to the tax board. So you actually have to send, so depending on what state you're paying it to, so sales tax goes to a different place than your state tax, which goes to a different place than your income tax. And so we actually, on our blog, outright.com/blog, we do have, particularly for sales tax, we've got every single state, and then we have like the address for it, and we've got the information about the sales tax. So that's definitely a resource to use to figure that out. When you actually go into Outright, there is a button that allows you to record the fact that you did the payment. And that's particularly important. You want to do that for, definitely for sales tax, so that you can keep track of that.
Okay, here's an interesting one. Can your current business purchase a bulk of inventory from one of your old dead businesses? This person's been storing stuff in a closet for years after the business closed. Or,
yeah, I'm not sure on that one. My guess would be yes, that you could do that, right? Because your new business, wherever they get their inventory from, is where they get their inventory from. So it doesn't matter if that's a defunct business or not. But you'd probably want to double check that with an accountant, because I'm not 100% sure.
okay, let's see. This person's mother has an eBay account and started selling items this year, but also sold items for her sister, almost like consignment. As a consequence, she went over the $20,000 mark. How can she file these transactions on her taxes?
Yep. So again, that everything she sold is considered to be her revenue, and then she would deduct the amount that she paid her sister, plus any other expenses she had for the quote unquote business. And so it's the same as you would do with any consignment, is that because of that 1099-K form, it forces the issue as to how you account for that revenue. And it basically says any revenue that you received is yours. And then if you pay that out, again, that becomes a deduction for you. So hopefully for her, she should have, if she's paying her sister like the full amount, then, I mean, basically her profit would be zero for those sales, but she would just show as, $100 in revenue and $100 in expense for that revenue, as an example.
Okay. And then her sister, if her mother is selling them for her sister, then her sister would in turn probably need to.
Yeah, her sister made revenue, so she'd have to do the same thing.
Okay.
She'd have to put, I got this much in revenue. I mean,
it's a circular.
Yeah, the sister won't be receiving a 1099-K probably, but
exactly.
But she is always, I read up once on what's considered income by the IRS, and if I steal something from somebody, that is considered income. So, so the IRS is very strict about what's considered to be income, pretty much everything.
Okay. If I use my car quite a bit for driving to buy products, and I bought a new car this year, is a portion of that deductible?
So most likely not. You could probably find some accountants that could make it happen or say yes. And the reason being is that you're probably, if you're mixing the car for business and work, then it comes down to you have to either track the mileage or you have to track the amount of the expenses for the car. So now if you have a car that's specifically only for business, then that's a different situation. But if it's for both, I'd probably recommend just doing the mileage rather than getting into all the intricacies of the tax law.
Okay. Here's a person. I'm a coin collector selling my coins on eBay. I've been collecting them for several years. Do I account that as inventory?
Yeah, if you have it, yep, if you have it in inventory, yes. You would have to. And so basically you'd have all the receipts from everything that you've purchased, all the coins you've purchased, and that would be your inventory.
No, here's a good one. I have about 30,000 rebate money in one of my vendor accounts. They do not allow you to take the money. They want you to use the money in their store. I know the rebate money is not taxable, but how should I handle that if the inventory from the rebate, so I have a rebate and I have to spend it in this store. But how do I handle that inventory? Because
That's a
technically,
great CPA question because that's
Yeah, that one I'm
$30,000.
not sure about.
Pretty sure we need a CPA for that, but that is a very interesting question. Do you spend
Yeah,
that money
definitely
and pay
CPA.
tax, get the inventory, or do you save it and pay less taxes?
oh my goodness gracious. Okay. When will Outright be able to track multiple states for sales
And I
tax?
told Robert they're already doing that.
Aha. Mhm.
How do you do it, Kate, Kat?
You
I
go
know
to
you.
the
I know what you do, but I'll let
You
you
go,
tell.
it's very easy, Robert. You go to the reports tab and you can do sales by state, and they'll either show you a map or a table. And you can put in the month that you need the month. How many sales did I make to Pennsylvania this month? Or you can put in the quarter. How many sales did I make to South Carolina this quarter? And it shows it right out there on the page for you. So it's very simple.
Cool. I haven't done that yet. Oops, I'm bad. Um, should you use a CPA or an re-enrolled agent?
I've never heard that term, Laura, re-enrolled agent. Have you? I've heard enrolled agent, but I've heard that applied in the insurance industry. Are you familiar with that? You were
Yeah,
Priyanka?
I'm not
Yeah.
re-enrolled agent. I'm not sure, but
Enrolled agent is a term they use in the insurance industry for someone who is taking their test to become licensed for insurance. I have not heard it applied to a CPA, so whatever that means in your state, I'm voting for the CPA.
IRS enrolled agent, not a CPA.
Okay, thank you, Charlene. Charlene
oh,
says it's an enrolled agent with the IRS. I am not familiar with that term. Laura, any comments from you? It seems like if they were
I
enrolled with
believe
the IRS, it'd be
what
a
they're
good
referring
thing.
to is a CPA. Yeah, so a CPA could be somebody that does taxes, and it could be somebody that just does general accounting. Whereas an enrolled agent would be probably a CPA who also then signed up to help with taxes. And
Okay.
by
Okay.
law, if you're going to help with taxes, then you should you have to be an enrolled agent,
I
or
love
you
our
have to.
audience, Laura. They are all the, you and I are going re-enrolled, huh? And they're giving all this wonderful information.
Oh,
So
good.
we have a very educated audience. Thank you, ladies and gentlemen.
Yeah, so that was the IRS changed that law like I think about a year ago because there were quacks that were saying, oh, I can help you with your taxes, and they weren't. And so that's why people have to register in order to help with taxes.
Okay. So they're like tax preparers, like,
Yeah, there's a lot of information here from our chat. It is an enrolled agent for taxes. It's not necessarily a CPA, but they are able to negotiate with the IRS on your behalf and like a step below a CPA, they're saying.
Yeah,
Interesting.
and you could probably do that for like a tax preparer would help you with
Right.
your smaller business, but there's a point at which your business gets big enough that you need a CPA.
Hmm.
yeah.
Certainly, if you're doing accrual-based accounting, a CPA would
Awesome.
be the way to go.
I think the easiest thing for me to tell people to remember about this, all these questions about 1099 and inventory, is that the IRS pretty much already knows how much money you took in. They know your income. It's up to you to prove everything you're taking away from that income. So just think about it that way. They know that you took in these sales. You have to show them where that money went. Did it go to a consignee? Did it go to your sister? Did it go to your cost of goods? You have to prove all of that.
Is it in your back pocket?
Yep,
Is it under your
that's
mattress?
exactly right, Kat.
I'm pretty good at bringing it down to real simple stuff. Okay, I think we've covered most of the questions,
We have.
and
We got them all.
everyone is very complimentary, Laura and Priyanka, about Outright and your knowledge, and thankful for you to share. And I want to remind everyone to please make sure that you're signed up with the Top Rated Seller webinar series because next year, 2013, we plan on being twice as good as we were in 2012, and that's going to be a challenge. But you can sign up for our newsletter at pagemage.com/top rated seller webinars. We will be having 2 webinars in the future. And also, this webinar, the recording and the slides will be up on that website and on our YouTube channel within 48 hours. So if you go to youtube.com and look for TRS webinars, you'll find a recording of this and you can watch it again.
And if you subscribe to the channel, you'll be known, they'll let you know when we have new webinars up there.
Awesome. Thanks again, Laura and Priyanka. We'll see you guys around the web.